Hello, everyone. Happy Friday. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup. Friday, March 20th, 2026. Ron Quaranta here with my amazing friend and co-host David Brill. And once again, the one and only Adam Goldberg. Josh Clayman couldn't join us. David, she's on the Gulf Stream somewhere over the Atlantic. For everyone who's tuning in on LinkedIn Live and on Next and on YouTube, thank you so much for joining us. If you've got questions for David or Adam or I, put them in the chat. We're happy to address them. And obviously, our usual disclaimers. Please keep in mind that nothing that we're discussing really is any sort of advice or an investment advice. And what we talk about really are our own personal opinions, not necessarily the opinions of our respective firms. David, Adam, it was a busy week. And the more we keep saying, well, it keeps getting busy, it gets busier even after that. David, Adam, let's talk about the big news out of Washington, D.C. Big event in Washington, obviously, and the SEC and CFTC had some announcements that in another lifetime would have been seen as absolutely unbelievable. We would not have imagined this, David, 2 or 3 years ago. Adam, can you, for the audience, just tell us a little bit about what the news was and why it's impactful, and let's discuss it from there.
Well, I'd say the most major piece of news, I think David will break down some of the big happenings that happened at the conference in DC this weekend for the Digital Chamber of Commerce. But what was most important, I think, coming out of the regulatory agencies was a final rule issued by the SEC in coordination with the CFTC, which finally brought, I know we like to use the word clarity, but clarity to the figure and digital asset ecosystem as to what the SEC views to be an investment contract and how that applies to crypto. It had been guidance that I think we had all been seeking and waiting for years now. It was something that they were mandated to do under the president's executive order early in the year, and we did see the White House report outline kind of the White House view. But to have a final rule from the regulatory agencies saying this is how we interpret our mandate and the law, I think is very important for practitioners in the space. It gives a lot of clear, bright line rules as to when certain types of assets that would be considered securities, certain type of assets that are not. I think also one thing to note, though, it does give a full-throated embrace of Howey. And as we know, Howey is a facts determinative. Basically, you apply the factors to each potential investment contract.
Yeah.
Even under this guidance, there is still some area for kind of fact-based analysis and review as to, especially for those tokens that may be investment contracts at the onset, but then may transition to a digital commodity. That is definitely something that was discussed. But I think it was great news for the industry to kind of have very clear rules of the road. It's something we've been seeking. I think it would be great to get legislation that codified that in law.
Yeah.
But this is kind of the second best you can do.
David, Adam, thanks so much. David, you and I had this conversation earlier this week at our crypto asset working group meeting. Adam, I think you're on that call as well. It was really interesting to me because often, David, for the past several years, and I keep using the word of philosophical conversation from a legal perspective. And I think one of the things that really struck me is we finally have regulatory agencies saying an investment contract is the transaction, not necessarily the token. David, why is that important, and why was that so hard for us to get to?
Well, candidly, our friend and good colleague, who's a partner at Cahill, has talked for years about, the token is not a security. It's, whether it's attached to an investment contract or acquired that way makes it a security. So I don't think this has been so hard philosophically to get to. It's just that the powers that be have taken quite a while to get to that place.
Yeah.
And I want to give Chairman Atkins and Seelig credit for having the foresight to come out with this proposed rule, or I shouldn't say proposed rule, this rule. And I think the whole crypto community is grateful for that. I do think it's interesting that the way this rule analyzes Howey is probably different than how the courts have analyzed Howey and their decisions. So it's sort of like we're getting the best of both worlds, and they're saying, we're looking at Howey, but this is how we think Howey applies to digital assets. So I think that's a unique wrinkle, and I think that's something, important. The other thing that I want to mention, even though we all would like to see clarity passed, is I think this is now an insurance policy for the crypto industry. And that if we don't get clarity passed, this rule is going to be the rule of the land for the time being. And even if we were to get another administration, another SEC chair who would later repeal it, the amount of work and the amount of integration that's gone on in the crypto industry is such that I don't really think the genie could be put back in the bottle.
Yeah. David, one thing to that point, there's been a not insignificant amount of case law that really was having the conversation about tokens and where the investment contract does or does not lie. Does that change future case law given some of the regulatory stuff, or do we absolutely need clarity, Adam, to that point?
Well, I'll just jump in and say, look, I think that the body that regulates commodities and securities should be defining the rules and should be the guidance for judges if cases do get to litigation. Mm-hmm. I think where we ran into issues were that you'd have a lot of well-meaning judges who weren't as familiar with all the nuances of this industry and the Howey case law as it would apply to this industry, and were doing their best jobs in kind of crafting decisions based on the facts and circumstances and applying Howey. Now we have the SEC and the CFTC saying these are what the rules are, and this is how it should be applied going forward.
Yeah, Adam, diving into that a little bit, when you look at the joint SEC CFTC rule, it was really refreshing to see this kind of breakdown of this is a security, this is a commodity, this is what we're looking at when we talk about wrapped tokens, this is what staking means within the context of these rules. I guess if we put our what's going to happen in the future hats on, what does this do for providers in the space or businesses that get started in the space in your mind?
Well, I think one of the good things about the guidance, which I'm sure David could share with kind of his conversations with his clients, is I think it codified a lot of what the crypto industry had been doing. So one good thing is this is not going to upend a lot of existing business models, because right. This is at least the SEC's conception of their mandate is kind of what the crypto industry had thought the conception of the mandate was. If it's a security, it's a security. If you wrap a security, it's a security. If it's a token, especially if it's a network token that has a lot of the characteristics of a commodity, I think one thing that really, when you read the rule, the 68 pages, there was lots of discussion around the managerial efforts of others. So basically, as we know in Howey, one of the most important parts of it is that basically the efforts of others are what's going to accrue value to the investment contract. Yeah. And you are basically putting your faith, dollars, and credit in that management team or whatever expertise is there to execute and create value for you. That they drew a pretty I wouldn't say sharp distinction, but they tried to really show that when you're talking about a decentralized network system that may have a network token, mm-hmm. that token really starts to look much more like a commodity. It's fungible. Its value is determined by supply and demand. It can have effects around if there's a network effect or there are people building on the network, but that does not in many cases, and I wouldn't say almost all cases in crypto, but a lot of cases in crypto, even that value being built on top of chains that might accrete to the value of the native token of that chain, mm-hmm. that may not be the labs company or the foundation behind that specific blockchain. The value is not directly tied to those efforts of that individual team that may have started it. Yeah. And they do say that maybe it was at inception, like maybe before, when you're first launching a blockchain network and you're doing some kind of ICO or you're doing some kind of token grant at the beginning, that can have the indicia of an investment contract if you meet kind of all the other ones, because at that point you really are relying on these people that are launching it. They're making certain representations that will, if they fulfill them, that should accrete to value. But once, we don't want to get into concepts of sufficient decentralization. I think that they definitely
stole my next comment, David.
It seems they were alluding to it without saying those words, but yeah. They did talk about there is a certain point, and they put some guideposts as to things they have seen in their experience as to when they think it's kind of jumped the shark from a potential investment contract to a commodity. They said these are not definitive. So, for example, one thing they pointed to is in the futures market context. If you have an ETF based on one of these tokens, kind of the rules there are that it needs to be based on a commodity, and the relative trading price of a commodity are usually an index that values that commodity, and then that's the basis of the ETF. They said that is not dispositive as to it being a security or a commodity, but it's a very good indication. And but even if you don't have that, if you're a particularly network token that doesn't have an ETF trading, that doesn't mean you're not a commodity just because you don't. But they did lay out some indications as to when they think the substance and the form changes.
Right.
So I think those are helpful for practitioners as they're trying to think about how we structure these things, because I think for most people, they want to stay out of the securities realm if they can avoid it. Yeah. And I think, as you said, it wasn't just in the rule, but they also produced a fact sheet where it literally said, this is not a security. Right. This is not a security. NFT is not a security. Staking, not a security. Yep. They went through as like, this is not a security, and maybe this little area is, but I thought that was quite notable as the way they went about it.
Adam, fully agree. And I remember so many meetings we've all had in DC over the past couple of years. And I remember early in 2025, David, when we were in DC, being pleasantly surprised at the level of depth in conversations with the SEC Crypto Task Force. This is the result of that. David, let me stick with you for a minute because, Adam stole sufficiently decentralized, which is a phrase we've been using for years. The other word we haven't used in a long time, David, let's get into the operational of it, is morphing. When we talk about looking at some of these token offerings, and I guess operationally, how do you both envision that conversion happening? I know Adam, SEC and SCFTC have given some guideposts, but as industry expands, how do they know, we've just morphed out of being a security into a commodity?
Well, I think maybe it's like how the Supreme Court ruled about obscenity. You have to see it.
Know it when you see it.
Well, I'm going to say a couple of things, but I want to digress on one point just quickly, is that I think one other thing that's changed with the Howey, looking at Howey, was the prior SEC assumed in every instance that there was an expectation of profits for token sales or token usage, and that people were buying tokens where there was an expectation of profits. And so I think here, that's not the default with this new law, with this new rule, I should say. So I think that's a big distinction too. And you'd see that in a lot of the case law.
Yeah.
I think it starts with that a token needs to have a minimum viable product when it goes to market. And I think the utility of the token in that product and governance are a couple of major keys that would probably help morph it into something. But I think that's a very dynamic, I think we could do 2 hours on that. But yeah. I think there are just sort of certain indicia that they're going to look for. I wouldn't expect full-throated analysis on each token.
Yeah.
But I think those are at a minimum indicia that they would be looking for.
Adam, were you surprised that they actually invoked specific tokens in the comments in the rule?
I actually wasn't, because some of those tokens have been cited specifically in case law by the SEC as to their determination one way or the other. So I think one of the things that they were doing is they didn't throw the baby out with the bathwater with everything the Biden administration did.
Yeah.
They said, okay, if there are certain things the SEC did in the past that we think we can build on, they were willing to do it. And I think naming the specific tokens was in that realm, because of a bunch of the cases they specifically said, these tokens we consider to be essentially digital commodities. These ones were concerned are securities. So I think from that perspective, I think it was notable. I think if you own one of those tokens or you work at one of those companies, I'm sure you love to see the fact that the SEC specifically doesn't consider you to be a security. I mean, I think it gives you a little more operating room and a chance to be innovative. I think one thing also to note, kind of looking at the general approach, as David said, there's not this presumption of basically the profit motive in all cases.
Yeah.
And I think it works both ways. I don't think that there is an assumption at the SEC that they're trying to pick apart every one of these projects and find a poster child to say, hey, you're doing it the wrong way. You're a security and you're a commodity. I think they want to go back to the old way how it was done, where we did a fact-based analysis and you came to your conclusion, and then if investors disagreed with your conclusion, they went to court and they argued it out, and you had a trial as to the facts and circumstances and how much managerial involvement was there, how much expectation of profit was there.
Yep.
A big thing they pointed out is it's really important what you say when you're the management team early on.
Yeah.
So you're specifically making very securities type representations of what will happen, and that's that when those things happen, that will lead to profit.
Yeah.
That sure looks like a securities offering where you should disclose and have disclaimers and be liable for those representations.
Right.
So I think that that's another way to look at it as well. As I think this SEC under Atkins seems they very much want to go back to the way, at least in Atkins' mind, the commission is supposed to function.
Right. Adam, thanks so much. And for everyone in the audience, again, thank you so much for joining us. If you've got questions for David or Adam or I, please put them in the chat. Gents, I want to rip up the script slightly because I hadn't asked this question on prior working group meetings that we had this week, but I did have conversations with colleagues, and you mentioned ICOs earlier, Adam. I guess the question becomes, what does this do for capital raising in the crypto asset world? David, Adam, any thoughts about that?
I mean, look, it's a good question. I mean, I think ultimately you can't have a token as an end around to doing like an offering if you want to raise money.
Right.
So that can't happen. And I think everybody has to be a little bit more thoughtful about if they are doing ICOs, like how are they doing it? What are they doing it for? Like we talked about, is there an MVP? Being really careful about what you say and how you position it. So I think those are, certainly some guardrails people will look at. But I could see some different flavor of the Binance Launchpad, coming back here in the U.S. But I think it'll be done ideally, thoughtfully, and with the new rule in mind.
Adam, you agree?
Yeah, I would think one thing I would say that is, I think, notable for this SEC is this SEC has been very crypto friendly and very friendly to the industry.
Yeah.
But one thing they have not got given the industry that some people in the industry want is their view is that if it's a security, it's a security. And there are some people, as you know, in crypto that think just because you put a wrapper on something or just because it uses blockchain technology, then that opts it out of securities laws.
Yeah.
That is not the view of this SEC. The view of this SEC is if you're dealing with a security, you have to comply with the securities laws. And they're going to tell you as strictly as they can the limited areas that they believe where it is a security. So you have the heads up to know that you should be complying with securities laws. So the only reason I think it might not lead to a resurgence of ICOs is because I think in the first craze of ICOs, there was this kind of laissez-faire attitude that these are not securities. This is not a tender offer. This is not an IPO. We're using this new kind of technology. We're using airdrops. It's distributed. We don't have to follow the same rules. We don't have to follow prospectus. We don't have to be liable for our statements. We don't have to do all these things that companies need to do when they go through the normal process.
Yeah.
That is not the presumption I would take away from this. So again, I don't know if you'll see a huge run of ICO activity because I just don't know if people in the crypto community want to comply with securities laws by and large.
Yeah.
Because I mean, as we've gone through this experience ourselves, getting our first blockchain native share class out, and it's not the easiest thing. We got through the SEC process, but it took a very long time. There was a lot of back and forth. They had a lot of probing questions. We had to jump through a lot of hoops. There's a lot of things you have to think about from the securities side that basically you don't have to think about at all on the crypto side. Like you don't have to think about transfer agent rules when you're thinking about crypto. You don't have to think about best execution when you're thinking about crypto. You don't have to think about regulatory reporting when you're doing spot crypto. So it's like there's all these things you have to comply with if it's a security that you don't have to comply with if it's just spot crypto, which is considered a commodity.
Adam, well said. David, one thing to wrap all of this up, and you and I and Adam have had these conversations, is I'm just going to say broadly the popular media perception from a lot of this, the way you both, Adam and David, elaborated on it. And David, we've talked about this. This is not a regulator saying everything is permissible. This is not a regulator saying, fraud is okay. And I mean, there are still very strong guardrails here. Why do you, and let's again rip up the script a little bit, David, why do you think it's still sometimes portrayed in the media? And I don't want to be political, but Adam, David, certainly some politicians look at this and say, it's free reign again for the crypto bros. Why is that still out there, that dialogue? I brought it there, Adam and David.
Look, I have to give you a nuanced answer, but look, I think there's some part in the business media that just doesn't like this part of the ecosystem and is very negative on it, and they report negatively. I think other places they're skeptical, and other places I think you get fair reporting. I think that I think unfortunately people still think when it comes to crypto, they still think of Silk Road. They think of FTX. They think of all the negative things. And I think one of the things that we talked about in the green room was because we were delayed 4 years in the US from really developing and integrating crypto into our everyday lives here, people just don't see it being used on a regular basis. And so, until we start really being able to use it on a regular basis and people seeing it being used, I think there's always going to be that overlay on top of it. And then, you add the political discussions that I don't want to touch. And there's just this view that there's not a lot of utility from it. And I think the more reasoned reporters that go into it deeper will all reach the conclusion that, look, the blockchain technology is going to be used by, the banks, going to be used in crypto. It's just really spending the time to really understand what can be accomplished with this. And I think you're going to see with AI agents using micropayments of crypto and stable coins, that it's going to be harder to get away from the narrative that this isn't, doesn't add value to the ecosystem.
Yeah, David, Adam, I want to give you a moment. I just want to do a shout out. One of our comments, David Wysocki, co-chair of our tokenization working group. David, he went there. How does the death of Chevron deference play into this? Are industry favorable policies of Atkins and Selig going to be more than the regulatory equivalent of an executive order? Adam, I might give you that one to start, but I do want to hear what your thoughts are.
Yeah, no, the only thing I would add a little context and just say, I think one thing to remember about crypto is some of the criticisms of it, especially around this kind of deregulatory angle, they're not unique to crypto. You're going to find, and you will find, the Elizabeth Warrens of the world and the liberals, the liberal Democrats of the world, when a Republican administration is in office and they're pursuing a deregulatory agenda in financial services, it doesn't matter the type of financial services, you're going to have those voices against it. So I think that's almost inevitable, is whenever you're dealing with something innovative and you have an administration that takes a deregulatory bent, you're just going to have people on the other side that are just not going to be favorable towards that. And you're going to say it leads to crises, it leads to people getting scammed. So I think that's one area there. As to the Chevron question, I think an important thing to remember is getting rid of Chevron deference basically said that what Chevron, the previous version of it, was when the law or language is ambiguous, we are going to essentially trust the expert recommendations of the regulatory agencies because they're in the best position to write those rules as they understand the laws. And now it's really, you just have to go back to the statute itself. I think if you ask the representatives from the CFTC, and especially the representatives from the SEC that drafted this final rule, they would tell you that they are living up to the letter of the law as the securities laws exist. They are tracing back their authority to the 33 Act, to the different relative securities provisions, and saying, this is the law as written, and we are in the guidance there. So they may be they may have a stronger case if someone were to challenge them on a Chevron deference point of view and saying, you're operating outside of statute and you're living outside the letter of the law. This wouldn't be, like, I would say that the classic example of something that's struck down under the new standard is the EPA regulating climate change and regulating greenhouse gases. That was not articulated in the Clean Air Act and the Clean Water Act. So when the EPA went and did that, even though if it was in their view to further their mandates under those acts, because they couldn't go back to statutory text that said, hey, we're going to regulate greenhouse gas emissions or we're going to regulate methane, it made it much harder for them to make that argument in court. I think this the SEC would have a much stronger case in saying this is the language of the 33 Act, and everything we're doing is under the guidance of this exact language that's enumerated by statute.
Yeah.
So I think it's a little different in that text.
Adam, thanks so much. David Wysocki, great question. Adam, David, we'll talk about the markets and impact. And David, we've got to address the geopolitical world well. But Adam, David, when you look at SEC and CFTC rules related to crypto assets, I've got to ask the political question, Adam, and let me start off with you on this. Political from the perspective of, does this add pressure to the Congress to move market structure legislation forward? And we do have some updates, or at least rumors of updates there, Adam. But what do you think about the pressure angle of some of this?
Well, I don't know if it adds pressure on them to get it done. I think, as David said, I think it definitely provides a fallback and shows that the administration is ready, willing, and able to act from an administrative capacity if they don't get legislation. Yeah. And they're going to keep moving towards that road of going in the direction they think they should be going in, which was articulated in the report that the White House issued that was a result of the executive order, and then these rules further flow from that report. Yeah. I would say the only impetus in putting pressure on Congress is senators like to put their stamp on things, at least when I knew senators when I worked there. Yeah. They like to take credit and say, I wrote this law. This law is in action because of the work I did. I wouldn't say they're selfish, but I would say they're self-promotional in that way. Yeah. Without a bill such as Clarity that they could point to and say that it was their role in getting that passed that led to these rules, it does leave them a little bit out in the cold from that perspective. So I'd say that's the only sense of pressure in basically just kind of the somewhat jealousy of wanting to actually do the policy making versus the regulatory agency. That's not usually enough to get legislation passed, but I mean, there's only 100 senators. You have to have a pretty big ego to think you could be one of 100 people in a country of 300 million people plus. So a lot of them do have large egos. And I know at least for some of them that are retiring, this is a very big legacy item for them, and they definitely want to get it passed. But I think it's more in the backstop concept, as David said, if legislation doesn't get passed.
David, to Adam's point, I don't see a lot of legislation anymore named after senators or congresspeople. I don't see any Dodd-Frank equivalents, and it's a good point. David, please add to that.
Yeah, I want to take an interesting take, and this is sort of a first look approach on my end. But I actually think this may bring some of the Democratic senators to the table, in the sense that the rule as drafted by the SEC and the CFTC gives the crypto industry much more latitude than I think a Clarity bill does, with regards to disclosure and other types of things that would be required from token projects. So I think in a way, and I don't know that this is the thing that's going to get, over the hump, but this is a more favorable outcome for the crypto industry on this issue of taxonomy than would be in Clarity. Because if you look at like the alternative assets definitions and what type of disclosure is being sought, those aren't things that are in these rules right now. So there's a dynamic there that exists that I think more Democrats would resonate with than more Republicans necessarily.
Yeah, David, good point. Adam, David Wysocki, nice reply. For the record, all of Adam or David's responses are smart and usually off the cuff. So, well said. David, Adam, good.
I did want to add another thing is that, we can't lose sight of that. The things that are most intractable right now with Clarity really don't seem to be related to taxonomy. It is still how a stablecoin yield. And I think there is still some going back and forth. And as I understand it, there's one senator that's really holding out with regards to DeFi. So I think we do have to keep in mind that dynamic. And I was fortunate to hear Senator Lummis talk about what she thinks was the way forward, meaning that stablecoin providers cannot use banking language when talking about the rewards they could receive, and that they would have to take some active step, not just holding the stable coin, but taking some actual step forward with the stable coin to receive those rewards. So I think we shouldn't lose sight of the fact that those are really the two big issues. I know the ethics issue is out there, but I don't think that is as contentious as the two I mentioned.
And we've heard commentary that ethics is not the contention. But Adam, my read of it is that it really is the approach to stablecoin and yield that's the biggest hurdle. Is that an incorrect reading in your mind?
No, I think that's the correct reading in that we do need a path forward there to kind of unlock I would say the way I would look at it is getting a compromise on stablecoin yield kind of unlocks us getting back on the legislative calendar. Right. And that's really what we need at this point, because we are running very close on timing to the point where some people, especially some very committed crypto senators, such as Senator Moreno, my home senator from the state of Ohio, he has basically said if this is not done by May, basically by Memorial Day, it's dead. That's in his mind. He's like, it's drop dead date, must be done by May. If we go into the summer and get it to campaign season, like you can kiss it goodbye. Yeah. So if you want to hit that, there is very limited legislative time now before the Easter recess. We heard Senator Loomis say her timeline for getting something out of the banking committee. She chairs one of the subcommittees, the digital asset subcommittee on the banking committee. She said the plan is when they get back from the Easter recess, which would be mid-April, to ideally as very close as possible to start marking it up in the banking committee and starting to reconcile the banking committee draft and the ag committee draft.
Yep.
She has said, at least in her mind, there has been a lot of progress on the agricultural side where they are ready to pick up the ball once they're in an agreement on the banking committee issues. And one thing they've been teasing is there is the potential, I haven't seen an announcement yet, but there is potentially a bipartisan compromise on stablecoin yield negotiated between Senator Tillis and Senator Alsterbrooks, Republican from North Carolina and Democrat from Maryland.
Yeah.
If that were to move forward, I would say that would be a very good sign that we're back on the path to getting passage. If we continue to slip into next week and the week after and we're still not seeing any progress there, then it makes it harder to see how we kind of get back on the schedule.
Yep. Adam, David, I want to wrap up the conversation on the DC goings on, and they're all important. We can go on for hours. Longtime viewers know I will no longer wager David or anyone on anything in the crypto space. But David, Adam, real quickly, what are the odds in your mind that we get market structural legislation by Memorial Day?
I've continued to be an optimist. I do. It is rare that you see senators, staff members, the White House put so much effort into something and then let it die. It's happened before. We saw cap and trade under the Obama administration die. They even passed it in the House, some more to clarity. They tried to get it in the Senate. The only thing I would say about that is that never really had a good shot in the Senate in the first place because you had Joe Manchin as a senator and other people, and it was just very hard to envision how the Democrats were going to get 60 on cap and trade back then.
Yeah.
I think there is a much more reasonable path to getting 60 on clarity. We know that there are a lot of potentially supporting votes on the Democratic side. Yeah. And especially if you see a compromise that's a bipartisan compromise, let's say led by Alsterbrooks on a very important issue to the bill, that will give a lot of cover for other Democrats to vote for the bill in committee and to vote for it on the floor.
Yeah.
And also, one thing I would note is Senator Tillis, who's the Republican that is negotiating this compromise, obviously has been very outspoken against the administration. On the Republican side, he's refused to provide votes. He's been talking very publicly about the Fed chairmanship and that he won't confirm Kevin Warsh or even vote him out of committee while the investigation of Jerome Powell is going on. So he's been quite a thorn in the White House side.
Yeah.
So, and I know he's been seen as one of the most problematic votes because he sits on the banking committee. So he has essentially the ability to kill it and not let it move forward unless he agrees.
Yeah.
He's kind of been the last holdout here, and it's rumored that he's very close to agreeing to the compromise.
Adam, thanks. David, I want to give you some airtime on your perspective on odds by Memorial Day.
So I agree with Adam, and Adam said it, really well. I think a bipartisan version, I'm going to go with the 50-50. I wonder what Kalshi has to say. Somebody could fact check Kalshi while we're doing this. I think that would be great. So I agree with Adam. I will say this, that if it does go to a vote and we don't get 60 votes, I think the Democratic side may pay a penalty with a lot of crypto PAC money showing their displeasure in the upcoming election. And I just think that's something that we should be mindful of. And I'm not saying that should influence somebody's vote. People should vote their conscience. And I think obviously the three of us think this is a bill worthy of passing. But I do think that wild card is out there, and I'll wonder how that would play out.
For those of you in the audience old enough to remember, like I and David do, this almost went McLaughlin group hour. I got to digress us a little bit. David, Adam, there's so much to cover from the market's perspective as well.
Yes.
So let's set the table here, David. Lots of relatively good news out of DC, lots of investment that we're seeing, lots of progress. We'll have to talk about tokenization and real world asset tokenization. BTC still can't hold 70,000. The relative strength index is dropping. Fear and greed is higher, but it's still in fear, David. Is it just geopolitical goings on in the space that are holding back the marketplace? And how do you see that playing out? David, let's start with you. And Adam, certainly want to get your perspectives as well.
So, David Wysocki.
David Wysocki, Calcia.
What he has to say. Approximately 7% before May and approximately 30% before June. Okay, somewhere between 7 and 30%. Appreciate that, David.
I'm not wagering anything in the 70 to 30% range. So,
well, I think it is 70% yes before 2027. So the betting markets are betting that it will pass. They're just hedging on the timing.
Got it.
I think it says approximately 7%, Adam, not 70. I think.
Oh no, I just checked it. So
he's on Calci. He's looking.
Okay, he's on there. Okay.
Yeah, so before July, the contract is 48 yes, 54 no before July. Goes up to 60 yes, 47 no before August. Then if you do before 2027, will it pass 71-32? So about 70% in the betting markets are thinking that it's going to pass by the end of the year.
Wow. That's really interesting. So going to markets, Ron, I think there's like multiple things in play. Let's first remember that when we had the first Iran conflict, Bitcoin went down approximately 15%. And we're not experiencing that here. But what we are experiencing is the macroeconomic headwinds of oil over 100, gas prices, are higher. PPI was very high. And then I think with the employment data, I think we wait till the revisions because, the first numbers always get revised. So let's hold on to that. But that mix of things, plus the idea that we may only get one cut this year, interest rate cut this year. And I think right now with looking at the way the world looks, one might be generous. I mean, unless things change. I don't really see on a macroeconomic level, and gold has been selling off, and I think silver and copper have been selling off. Wouldn't make sense right now to see Bitcoin rally, even though we like to think of it as sort of a counter trend asset. It's really been aligned more with trading with NASDAQ and another, typically, but in this risk scenario, it would be hard to see it going up. The one other thing I mention is there is some chatter that Iran is now offline when it comes to mining and doesn't have an ability to sell the Bitcoin that they're mining. I don't know that for sure, but I think that's something interesting to watch too.
Adam, what are your thoughts on the macro of it? And we talked to you a lot about the regulatory and the policy stuff, but I'd be interested in how you're seeing the macro impacts of what's happening in the crypto space.
Yeah, I mean, I think it's a larger conversation, not just about crypto, because I think all of risk assets are being challenged right now. It is very hard for risk assets to succeed in a stagflationary environment, and sadly, that at least if you look at it right now, that seems to be what we're in, and that also seems to be what the Fed is very fearful we're in, because the Fed talked yesterday how they're very worried that we haven't created any jobs in the last 6 months in the private sector, but they also don't feel that they can cut because inflation is well above their target. And in the latest readings, inflation is accelerating even before this oil shock, which will obviously only add fuel to potentially more inflation increases to come down the road. So I think in that environment, and I think you're seeing the S&P today is, I think, close to the lows it has had since, I believe, in months. So not just crypto, but equities are under pressure. I think I saw today that the 10-year Treasury note's now back on the March higher. I think it's at like 4.38 as of this morning, and I think it's up
Yeah,
100 basis points.
I think that's right.
So I think in that kind of environment, it really, no matter kind of what the dynamics of crypto are, it's very, especially where we were coming from, where there's about 3 interest rate cuts priced into the curve, and
Mm-hmm.
it was 2 that were supposed to be this year.
Yeah.
You're starting to see not even those cuts just be priced out. You're seeing the potential of rate hikes being priced into the curve, which would be a complete inversion of the setup we've had. As people know, if interest rates rise, that means liquidity is lower. If liquidity is lower, that means that there's less avenue to go for risk assets, and that's
Yeah.
not just crypto, that's equities, it's all across the board. So
Yeah.
I think it's a challenging environment right now. But I think also one thing I should note is we've been in challenging environments in the Trump administration before. It was right around this time last year. We were very close to Liberation Day.
Yeah.
And if you bought on Liberation Day, or you bought when the president said you really should buy stocks right now,
You did
you
well.
did like fantastic from the moment he said that. If you bought on, if you took your signal from him. So if there could be some kind of resolution to everything that's going on in Iran now on the shorter to medium term versus the longer term,
Mm-hmm.
that could be very bullish short term. You could see a relative snapback, just like we did with Liberation Day.
Yeah.
And then dovetailing with some of the clarity discussions we've had, I think an overhang over the crypto sector is the lack of a positive catalyst, because it's not getting a macro positive catalyst. It's not getting a positive catalyst from lower interest rates. It's not getting a positive catalyst from a lot of money going into risk assets. But if it had this legislative catalyst, which we saw with Genius Act, one of the biggest run-ups we had was post passage of Genius. You saw a huge run-up in digital assets.
Yeah.
If we were to get clarity, that could be a huge positive for the industry. And then maybe you could see Bitcoin break out of this very tight range it's been in. I know it tried to 75 last week. It's back in the 70s. But that's when we can start to maybe build momentum to get back to that 100K Bitcoin level.
Adam, thanks. David, did you notice how elegantly he inserted the word stagflation into the conversation?
I did.
And if we're going to have a risk on, risk off, David, we've got to peel back the perspective on stagflation.
Ron loves stagflation. He just loves bringing that into the mix. And Adam, I think you were like, and I think you were channeling me, Adam, because I was thinking a lot of the same thoughts. I also believe that the president is very invested in having a strong economy going into midterms. So I really believe that, there's going to be a goal to get the economy, and I'm not even going to say back on track, but just further along where he envisions where he wants it to be, and the market reflecting that. So I think I think also, and regardless of where you fall on the sort of view of the conflict going on, we are in a situation where we do have this sort of once in maybe our lifetime chance to sort of reset the geopolitical stage. And, we've had one actor that has been funding, terrorism across, maybe across the world, if you really think about it. So I do think that this could really create a new order in the Middle East, and maybe one that's more harmonious, and one that could just benefit the world, whether it be for gas and oil policy and just harmony in general amongst different countries and peoples. So I really think we are on the precipice of something really major if the U.S. and Israel is able to prevail.
David, Adam, I want to push back a little bit on the stagflation conversation. I don't love stagflation, but I think there's some really interesting components to this. David, you and I have had this conversation a lot when we're looking at measures of risk on or risk off. And Adam, you indicated that inflation is rising. I'm with you on the public commentary around it, but it makes me, David, ask the question, what are the inflation measures that make sense? We could talk about jobs as a separate thing. And I don't necessarily disagree, but when you say something like 4% on inflation being the reason for risk off, there are pretty comprehensive data sets that still say, David, we're below 2% on inflation. Moving up, I get it, given the shock of macro. I guess the question becomes, what data do we believe?
Yeah, and I think that's a great question. I think, yes, if we keep energy aside, because that's something we can really point to,
Yeah.
it's not clear to me that that prices are continuing to rise, like in the everyday things that we're doing and seeing. I will go back to the point that I've made often on our podcast that it
Yeah.
does concern me of the distress that lower and middle income individuals are having. And
Yeah.
I think, whether it be taking money out of 401ks, whether it be credit card delinquencies, whether it be car repossessions, those are things that like I look at and say, okay, those are problems. And those are not, whether the data is 2% or 3%, those are problems that somehow need to be addressed. But I do also agree that I think these inflation numbers, again, keeping oil prices out of it, it's really hard to tell why did we go up so much in this last month, and is that really an accurate reflection of what's going on and what people are living?
Adam, are you more accepting of employment and inflation numbers than David and I sometimes are?
Well, I think it's a complicated picture, right? Because we have a
Sure.
very bifurcated economy. I think if you look at the last month, the top whatever 10% of the economy, I think, is accounting for like 50% of the spending and almost all of the new net spending.
Yeah.
But they're still spending and they're doing great, it would seem like. And obviously, there's some wealth effect from the markets being flat, stagnant, or down a little bit. But you're also talking to people that if you have assets, your assets have gone up in the range of 30% the last couple of years if you've just been invested in an index fund, just on your growth in the S&P and not really doing anything exotic. I think one of the pressures David notes on the lower and middle income consumer is they're not asset owners. They largely live paycheck to paycheck, and as cost of goods go up and inflation continues to happen at whatever level it is,
Yeah.
that's the big bifurcation we see. Because if you're a wage earner, your wages are worth less if you're not
Right.
getting wage increases that commensurate with it. And I think with some of the things we've been seeing in the job market, one of the reasons that the markets have gone up so much is corporate profits are doing great. And one of the reasons corporate profits are doing great is because we're having this productivity boom that we have not seen in a few decades in the United States.
Yeah.
And people are debating what the cause of that, and that may be AI. I know in my job, for example, AI personally makes me considerably more productive, and I could do things with AI that I couldn't do on my own. And that does require less people. You're getting more output from each worker, which is good
Yeah.
for the corporate level, great for the bottom line. But is that good for the worker? Because
Yeah.
the worker has a harder time justifying getting a wage increase if the company just laid off 50% of its workforce because of AI and so many people can do so many more things.
Yeah.
So I think that's kind of the push and pull, right? Is maybe the metrics are good, maybe the metrics are bad, but I think, as David said, if you're a lower income household, you're struggling because you've seen your costs go up 40% the last 5 years, and you
Yeah.
have not. People have not seen wage increases go up 40% the last 5 years, so you're losing ground no
Yeah.
matter what you're doing.
Yeah, and on a serious note, obviously, David, you and I have this conversation a lot. These are human conversations about humans, and a K-shaped economy in the aggregate is long-term not good. So, and we're looking at very systemic, cultural, multi-decade, generational changes. Adam, you raised AI. We can do an entire session on AI alone. So, Adam, you're absolutely right. I'm with you. There are systemic challenges to some of the things that we're seeing. David and I often joke about the veracity of data, that there's still underlying challenges for so many across the country. David, Adam, we've only got a few more minutes. I'm going to go ask David to pull out his technician's hat, Adam, because we often talk about, and way more frequently than probably Josh wants us to, David, text about price points that we're seeing in the marketplace. And you and I have chatted about options positioning. And I've seen some weird options positioning for BTC, for example, the past few weeks. I think I've read recently there's some short positions, long positions down at 33. There's some shorts coming up around 78. I'm not sure where the dynamic is, David. What are you seeing from options activity in your mind?
Well, I think one thing is Some of it is a little stilted because there are a lot of people who are holding Bitcoin or selling covered calls. So you
Right.
see a lot of call selling, and you can't always attribute that to necessarily a negative position. It could be like an income strategy. So that's one thing. Look, I think we're in a trading range. I think we need a catalyst. I actually think personally that this rule that was just implemented by the SEC and the CFTC is very, very bullish because it in effect is our insurance policy if clarity isn't passed. And it will enable both institutions, regulated and private companies, to move forward on their initiatives in the crypto space. So I think this has been heavily discounted in my mind.
Mm.
And I don't think people are appreciating the benefits of this.
Agreed. Adam, what is the Goldberg family office positioning when you look at some of the things going on in the crypto markets?
Well, I think, as David correctly, we've been in a tight trading range for a couple months now, and I think it's not just the crypto market. I think the equity market's kind of been in the same kind of tight range, and obviously, I think the fear with the Iran war is if it continued to get bad, it could break to the downside. I think if you had polled anyone in this group or anyone in the industry 3 weeks ago, I think we're on day 21 of this war. Even a day before the war, I think no one was really pricing a recession risk. No one was really pricing a massive inflation shock that would cause the Fed to hold off completely or raise.
Yeah.
So I think you're introducing downside tail scenarios that we haven't had. But I think given what we know about this president, and as David said, he would very much like a good economy, a good stock market. I think it's at least if you believe what he says, it is his favorite metric by which he judges his performance is the performance of the stock market. And obviously crypto has been pretty tightly correlated with the NASDAQ. If I would say it is likely, at least so far, not giving any advice, but so far in the Trump administration, betting on that he's going to do something in the long term that will help the market and help risk assets has been a good bet.
Yeah.
So I'm probably still in that camp. I would only just go back to the one thing when we were in our last discussion about do we believe the metrics or not.
Yeah.
One thing I will note is it may not matter so much whether or not we believe them or not. It really matters what the 12 decision makers on the Federal Open Market Committee believe.
Yeah.
And if they believe that inflation's accelerating, and if they're pricing out cuts in their forecast and they're thinking about raising rates to cap inflation, that really matters more kind of than whether or not we believe the data.
That's a really good.
They have to make decisions on monetary policy based on their understanding of the data.
That's a really good point, Adam. David, you can almost feel Adam wanting to say dot plot. And
Don't get me started on the dot plot. I don't think anyone agrees that is a good innovation that they brought forward.
No, agreed. David, go ahead, buddy.
Yeah, I do want to say there's a couple of things I want to say. One thing is that I do think target inflation should be 3% and not 2%.
Why?
We said that before.
Let me just stop that though. But why for the audience?
It's just not realistic. Like, I just think the way the world is working and the way, like, if you think about it, do we want people's wages to be 2% increases every year? Like, I think we'd want, and that gets fit into the cost of goods sold. So
right.
I just think in the totality of things, 2% isn't realistic in my mind on an ongoing basis. The other thing I was going to say is that, I think that, when we look at Bitcoin and Ether, we have these ETFs, and I think Morgan Stanley just came out with their own Bitcoin ETF. I still think that we need some catalyst for the altcoins. I think there are some altcoins that have they offer really good products, they offer really good services, but without, more clarity around the specific tokens, like how many are issued, are they going to issue more? Or there's just the indicia of like wearing my equity analyst hat that we don't have that makes it really hard to price some of these altcoins. And I think that, Bitcoin rises all boats, but I think we could use some altcoin beneficial information and catalyst for that. And I have one more thing. I know
Go for it. I'm sorry.
I think as long as the VIX stays below 20, I think we have a chance, for gains in the crypto market. But if the VIX started to get really high, I think risk assets would become more off the table, and I think then we could see like a faster sell-off.
David, two things to add to that. Let me start with the VIX. I'm with you, and I think a lot of people forget there's a term structure to the VIX. So when you look at 24, 25, 26 on the VIX, some of that's forward-looking, but I agree with you. Anything below 20 tends to at least weigh slightly more risk off. And I totally forgot what I was interrupting you about before. So obviously it wasn't important. I'll text you about it later. David, Adam, thank you both so much. We've got a few minutes left. We've got a lot going on. David, we're going to be in DC in May for our annual WSBA trip. It'll be interesting to see what happens between now and then. Oh, here's what I was going to bring up. A not serious note, but did you notice how easily Adam rolled with me saying Goldberg family office?
Yes.
Ron, we
just glided with
all
that.
aspire to someday. I do have 4 girls at home, so it's someday I would love to emulate all the great entrepreneurs in the space and set up a nice tax-free trust for them that is living off the assets of the family office. It's definitely a great aspirational goal to have someday.
He's a pro. He rolled with it, David.
100%. I still chuckle every time, Adam. So more power to you.
David, Adam, sorry. Last thing I'll raise, obviously, we've got Washington coming up next week. Shout out to Blockworks and the Digital Asset Summit. I'll be loitering around in Manhattan as well. We've got our networking and cocktails with a whole bunch of members and colleagues in the space next Wednesday. David, let's start with you. What are you going to be looking at over the weekend, and what are you doing for next week?
Oh, so I'm also going to shill that I'll be speaking at American University's Washington College of Law Symposium on March 31st, and I encourage all our friends in DC and DC accessible to come and see myself and WSBA members like Lee Schneider and Andrew Siegel and others. So certainly we'll be reading up on that and being looking forward to flying to DC for that. And one other thing is I am going to go to Bitcoin 2026, so I'll be out in Vegas for that at the end of April. For this weekend, I'm going to be watching Michigan go to the round of 16 on Saturday in their next
always match. Michigan for David, Adam. It's always Michigan.
Have to stay on brand. But I think like Adam and you, I have a lot of reading to do. I want to really dig into the rules some more, and I want to think about some of the things we heard down in DC, and I'm also curious to see what other people's reactions are. I feel like the rule, that the SEC and the CFTC have put forward, I don't think people are seeing it the same way I am about now we really have this insurance. And I'm kind of curious to see if people are thinking about it that way, or do they see it differently?
Yeah. Last comment, David Wysocki. Thank you so much for watching, making everyone smarter with a few giggles thrown in. That's why they keep me, David. The only reason. Adam, what about you? It's not like you're not busy at your firm, but I'd love to hear what your thoughts are for the coming days.
Yeah, so one thing I'll be looking at, the CFTC released some guidance this morning, I think, as kind of pairing with the SEC final rule as to some things as the way they view different market participants can interact. At my day job, we're keeping busy. We had an announcement yesterday where we're trying to solve the tokenization of real-world assets, particularly private credit. We kind of announced publicly kind of our solution to that problem that has bedeviled the industry now for a decade. But yes, lots of things going on. I feel like there's a different rule or agency guidance every single day. I try to keep up. The 68 pages the other night was, I wouldn't say the easiest read, especially the staking and airdrop section at the end. Yep. It was a good read, but tough. But just trying to make it through all the different announcements every day. They're definitely keeping busy over there now that they're not shut down.
They are definitely keeping busy. I'm still trying to get through the OCC notice of proposed rulemaking because we've got a bunch of members collaborating on that, and that is 360 pages, and I don't have enough coffee in the house. Adam, David, it's good to see you both. For everyone who watched, thank you so much for tuning in. If you've got additional questions for Adam or David or I info@wsba.co. We're happy to get to it. Josh will be back next week if the Gulfstream doesn't take her away. We'll leave it there. Thank you, everyone, for watching. Have a great weekend. Take care.
Thanks, everyone.
Bye-bye.
Thanks, guys.